So I guess the panelists here, I'd like to welcome a really, really great panel to kick off the day on mobile lending in Asia. I'm not sure I've identified where they are in the room, so maybe I'll call them by name and they can come up. So the topic to kickstart is lending in mobile Asia, and as I say, we've got a great representative panel. Mike, good to see you. We've got a great representative panel. First off, Jin Zhou, who's the CEO of Dumiao. Jing is in a white dress somewhere, I believe. Here she comes. So a little background on Dumiao, of course, part of Fintech Group. And when I say we've got a great representative group here, Jing is down from Beijing. Dumiao being the POS lending service of Fintech Group. So I think we're going to hear quite a bit about that. Second up, we've got Ling Kong. Okay. Ling Kong, who's the CTO of Dianrong. Right. So Dianrong as well. So joining us from Shanghai. Yes. So a company with which many of you will be aware, and indeed, I believe your 2016 annual results were announced yesterday. I was leafing through them today. $16 billion RMB originated last year. So that's just a little bit under $2.5 billion US dollars, and pretty incredible when you think about, I believe the figure is 3.6 million individual investors on the Dianrong platform. So certainly one of the pioneers in the region, and from a volume perspective, hugely impressive. Last but not least, Adrian Chng, who's the co-founder, chairman, CEO of Fintonia Group. Adrian, I know you're in the room somewhere. Here he comes. So Fintonia Group, a fintech VC focused on ASEAN and Hong Kong. Have we got Adrian? Oh, let's assume he's en route. But a pretty interesting approach in relation to what they're doing, very much focused on ASEAN and Hong Kong. And Adrian and I were speaking yesterday about China being certainly the biggest online lending market in the region, and what the opportunities are there for new players as well as existing. So that's kind of one of the topics I want to address today. Tight on time, so let's jump straight in if you don't mind, guys. Can I ask to give a brief introduction into terms of what you're doing, and specifically framing as what problem are you trying to solve?
Should I get started?
Please.
Okay. So as James has introduced myself, my name is Jin Zhou, and I run a business called Dumiao. It's a digital lending business in China. We today operate in around 300 cities, and what we do is we provide a digital lending solution to businesses, as well as we acquire customer directly, consumer and also SME. Today we process about over 1 million applications a month, generate about $150 million of asset each month. And over the last year and a half since we've been in business, we have processed over 10 million customers' applications. So the whole idea of digital lending, in my belief, is that there's no human interaction in the entire process. So from the time of acquisition, from the point of contact with the customer on a mobile app, all the way to the point of disbursement of the loan, it should be straight through and without any human interaction. And the way to do it is to actually use data, use models, and make sure that the operation is most efficient. And the problem we're trying to solve is to actually to provide products to the market that actually caters for today's mobile customers. In China, I think it's probably one of the most advanced mobile adoption in China, where most of the customers today do everything on mobile. I can use my mobile for a week without touching my wallet, and I can pay everything online. So in this type of environment, having a lending solution that adapts to that environment, I think it's the future, at least in the China market today. Same with SME. I used to work for the banks, and SME underwriting takes about 2 weeks to a month in China, especially in the cities where it's not in the top tier 1 cities. But today we can do an SME application, use data that we collected, over 40 data sources, and process within 15 minutes. So basically, customer can get a loan within half a day, without any providing any paper documentation, upload any paper documentation, and get that process within half a day. So these type of digital solution, we believe, really caters for today's China market, both on the personal side and the SME side. So that's what we're trying to address.
Okay, just before we go into Ling, so to be clear, is it a question of serving otherwise underserved or unserved customers, or is it simply serving those who can already access traditional finance, albeit in a much more personalized and speedy manner?
I think it's both.
Okay.
On the personal side, 97 to 99% of my customer already has a credit card. So they're not underserved. They're prime population. However, they don't like the traditional banking service. They don't like to go into a bank branch. And they don't like to provide physical documentation, upload their pictures, having to hold a card and say something to a machine.
Okay.
But we embed our services with some of the large online retailers as well as to help the financial services to get customers. So from that perspective, we're not trying just to get to an untapped market, which a lot of us underserved or we're actually giving loans. We don't want to give loans to vulnerable customers. For example, we don't do students.
Okay.
We don't believe that they have the capability to pay at the moment. And therefore, we don't do that segment. So it's very traditional lending, customer selection, risk managed in that sense, but just a different way of acquiring customers and service them.
Okay.
Yeah.
So, I mean, and I don't want to just belay this, but this is kind of one of the themes I want to bring out, and we have a relatively short session, is, what is fintech in mobile or online lending, and is it a question of competing on convenience and speed, and if so, is that a defensible mode in the long term? So maybe that's kind of something we can come back to. Could you get a sense of Dianrong in terms of what your focus is, where you're competing? I mean, I mentioned some of the 2016 numbers, huge. What problem is it that you guys are trying to solve?
Okay, so in general, when we started in China, we looked at China as a ripe market for fintech disruptions. We saw leapfrogging happening, with high-speed trains, with highways, with a lot of infrastructures, and we see financial services as one of the key infrastructures that needs to be renovated and updated. The traditional banks are quite slow and cumbersome at that. There are actually limitations to public segments, to different, I would say, city levels and the financial services associated with them. So we started building a financial services company, but heavily reliant on technology. And the technology part, as well as the financial services part, are all both horizontal, I would say, slices across the GDP economy of China. And every single vertical, then we actually try to hit and offer our help. So that's actually one of Dianrong's positions. So out of the I would say 20 billion or so outstanding assets that we have today, right, a lot of it is actually working with partners in scenarios. And as you can see, right, a lot of spending, a lot of lending scenarios happen at the point of sale, right, or at that particular situation. And that situation is best known by mobile, best known by what you can get out of the customer. Now, there's other thinking behind this, right? Now, traditional risk treats the customer as if, it's kind of like a bouncer scheme, right? Your risk department acts like a bouncer, and, you let the people in the club or not, right? Now, I would say the new digital lending, right, way is assuming you get rid of fraud or anti-fraud, right? Everybody is a potential customer. Then you are more reliant on how do you correctly categorize, tag, as well figure out who this customer is, and then give them the right to risk-based pricing. And then based on that, then during specific parts of their customer life cycle, then you service them. And they may sometimes be a lender, they may sometimes be a borrower. And in between these cycles, right, you try to hit them at the time that they need. So it's much more of a platform thinking, where it's not only you're solving a single scenario, right, or a single lending situation and need, but you're actually solving people's, I would say, liquidity needs, right, or people's money management needs. And via this, right, you actually are able to create a lot of products, right? And on top of those products, you can then structure different kinds of portfolios and actually package them together and sell it to the investors that you have. So that's our general, I would say, thesis, as well as what we do. So if you took last month, right, we did about 2.5 billion RMB worth of lending assets. Now, about, I would say, 2/3 of that, we understand the scenario very well. We know exactly where it happened, why it happened. It could be a cosmetic surgery installment payment plan for a girl that's looking to do, I would say, plastic surgery. It could be somebody who's actually fixing up their house just because they just bought their house and somebody upsold them and they needed a bit of money to arbitrage or to leverage in that between. So 2/3 is that, and then the other 2/3 is more non-scenario based and varied, right? So some of these people actually don't have financial services or access to them, and then some of them do, but they're not quick enough. Right, your bank, your credit card company actually knows a lot about you, but a lot of this data is actually just sitting there, not well analyzed.
Yeah, and I think that's a great point, which I want to come back to in a little bit as well, which is when it comes to the extension of credit. I mean, I guess it's that the traditional 5 C's still stand, but a lot of the time it's, how do we look at accessing transactional history and transactional data, which can then drive can we understand a borrower's capacity to take on debt? Can we understand their propensity to repay debt? A lot of this information is available to incumbent players, be they banks or credit card players and so on. And one area that I'd like to address in China and in other markets is, do we think at some point that incumbents will also engineer the same type of platforms? Will they co-opt some of these business models, or will that relationship be one of partnership? Maybe we'll come back to that in a moment. Adrian, great of you to join us. Leaving aside the China piece, which I think is just a fascinating fintech market, full stop, on payments, on lending, and so else. Can you give us a little bit of background? You guys are more focused on the ASEAN region and Hong Kong. Can you give us a little context of where you're coming from, what your focus is, and particularly as it pertains to lending?
Sure. So Fintonia Group, we're a venture capital, fintech-only venture capital firm focused ASEAN and Hong Kong. And certainly in the ASEAN region, excluding Singapore and excluding Hong Kong, there are certainly more mobile phones than there are sort of credit cards and bank accounts. Indonesia and Philippines is around 3% credit card penetration. So certainly the target markets for online players, or for any player, as a matter of fact, is to increase that. So lending as a percentage of GDP is still quite small, at least in the formal banking system. And I think my fellow panelists touched on a couple of things which I think are very important if we want to be a successful online lender. And the key part is that credit decision. Like, who is it that you can lend to? Will they repay? Right? Anyone can lend money, not everyone can get it back. So, we invested in a company called Credolab, which uses your mobile phone. There's, I can't remember how many, 500,000 data points on your mobile phone, over 400 characteristics. And through that, using people's mobile, they're able to score for the banks. And that, we think, is the foundation of any online lending or any lending in this region where there is no credit bureau and where there is very, very limited information on people. So the consumers using mobile is a big shift in enabling lending in Indonesia, Philippines, Vietnam, Thailand, so on and so forth.
Can I come in on that point? I guess myself, I have a background on the payment side and also alternative lending, and I've met with a number of companies, and we see it in press releases all the time that X lender leverages 500,000 data points or 40,000 data points. But in reality, my experience to date has been, yes, we might look at 20,000 data points, but in reality it's 50 or perhaps 100 that are actually meaningful. And typically they're tied to some form of transactional history. If you can't determine what someone's history has been relative to payments, transactions, or debt, it's very difficult to forecast what their future looks like. And I want to introduce that concept in, like, what are the real fundamentals of online lending? What are really the things that one cares about? I want to introduce that concept also in light of the fact that a lot of these countries haven't exactly been through a credit cycle. So as you rightly say, we could form a lending company today and push out a lot of money in a very short period of time. And in a rising market, that might be relatively straightforward. But as soon as we hit some sort of correction, so perhaps looking at the China piece, which is going through some correction, albeit pretty soft at the moment. I think forecast either way. Maybe both questions, Jing, if you wouldn't mind thinking about what are really the core, stripping away the PR and marketing side of it. What are the core fundamentals that you care about, and also what is the confidence level of the market relative to a potential correction?
Okay, so I'll address the first question first. In terms of the core fundamental competitive advantage of digital lending is the data piece, which how we use the data to do risk management. Still addresses the 5C that you mentioned, but in a different way. So how we do it, we connected to about 40 independent data sources in China legally. with customer's authorization. And then all the data is streamed in through API.
Can you give us a sense of what those types of data sources?
I was just thinking about that. We usually collect 6 types of data. One is customer's identity data. We check against the police station information. We get the bureau data, blacklists in the market. There are 8 bureau in China right now that's actually in the test phase, so we connect to all of them. We get mobile information through legitimate channels to see whether it has been hit to, let's say, collection agencies or has been called by a collection agency or vice versa. And then we also get online purchasing data from the e-retailers. So whether how many times that they purchase online and so on and so forth. And their payment information as well. So we also get Union Pay data, so that we get a sense of their credit card transaction. Again, not the underlying raw data that touches customers' real personal information, but a lot of them is summarized data. And all these data are actually streamed in using API connections. And in real time, we dedupe them, we clean them, we put them into a data lake. And on top of that, then we build a model. We do the feature extractions. We get the variable, deep learning, machine learning, however you call it. And then we build up decision models on top of that. All that happens within 10 seconds. So the customer can just get a real-time answer. But for us, we can process without any human touch, and therefore I don't have incremental costs on these little tiny transaction, each transaction. So it really cuts down the cost, gives the customer experience, and therefore customer would choose us. So we call that positive selection process. And that's where really the core, we believe the competencies and competitive advantage. Now today, Dumiao has about 300 employees. 150 is BD in 5 cities because we do want to connect with the customer on a personal level. The other 150, more than 100 is IT staff. We don't have any underwriters. We only have 10 customer service. And we service about 6 million customers on file today. So this type of operating efficiencies on top of the risk model, the risk modeling, we improve them every 3 months because long tenure is short. We get about 200,000 new customers each month, so there's plenty of data, performance data for us to actually improve the model on. So anybody who does credit here understands, that with that level of data, that level of performance data, you can improve your risk model quite rapidly. But it's the operating efficiency that really drives the difference in our business today. So we have about 100, over 100 core team member who can service over 6 million customers. And if the volume doubles, triples, our team will not grow that much longer.
Yeah, and I think that's
much larger, and that's the core.
That's probably the defensibility piece as well that I was referring to earlier, which is just the scalability of this model relative to an incumbent who is used to adding bricks and mortar and additional people in order to service more. Let me kind of move on to Ling, kind of building on that data piece. Again, I've seen companies out of the US and Europe who have sought to do, in addition to the transactional data and so on that we spoke about, have sought to do social scoring and so on and so forth. And I've actually come up against regulatory issues with this. In addition, we just published a pretty significant report on China FinTech a couple of months ago at EY, and we found, as part of the research, the expectation of privacy in China is, unlike any other market. Effectively, there is none when it comes to the provision and utilization of financial services, so be it payments or lending and so on. So in relation to what Dianrong is doing or the market generally, your access to data points, is that something that could be replicated in other markets, or is it unique to China in terms of ease of availability?
I think currently it is more unique to China in ease and availability. You'd be surprised that in China what types of data you can actually get. You can get a lot, right? I think Jin connects to 40-ish, right? But those are the 40-ish legal ones, and then you have all sorts of things, right? So there's telecoms coming. You just imagine Comcast coming to you and say, "I will sell you all your customers' search history." You could buy it or you could not. You could actually do filtering on top of build models and figure out whether they search for how do I scan my credit card and get money out of that. Right? So a lot of
data brokers, we hear this quite a lot. There are data brokers who are just selling various aspects of anyone's digital online life, and,
Yes.
and for a fee, you can understand more and more about that individual.
So in that respect, China is very wild. What I anticipate is that this year and next year, it will be a huge crackdown in terms of government and policies and actually making sure that data is provided accurately and correctly. Now, for the customer's part, right, the customer is actually relatively being used to being watched, right, in that large environment. So they're okay with actually sacrificing their data privacy for financial gain, right, or for future opportunity costs. And this is actually what you communicate to the customer, saying, hey, here's what I'm doing, and here is the types of data that I'm going to get, and these are the things that we will analyze you based on, and how we will actually feed back. So today we see a lot of coalitions, and all this data is starting to come together and starting to be transferred, right? So that you no longer have just single particular islands of data where fraudsters can go from one island to another and just fraud the whole place, right? So these are actually starting to be interconnected, and it's starting to be better. But from our
And is that happening at a regulatory level, that these data islands, as you say, are being aggregated, as in other countries where you have a centralized credit scoring system? Are you referring to the kind of the PBOC's initiative here, or is this a private sector?
I see today very wild, right? So there's industry efforts, right? People who have a lot of data trying to build more data, people like Alipay, right, Dumiao, right? There is actually regulatory push for that, but generally the regulations, the government is slower. But then there's local regulatory entities that actually get together and group these things together as well. Right, so in our respect, we look at data slightly different than Dumiao. Right, first, we get rid of anti-fraud, right? Because there's actually a group of people in China that, in my opinion, because I do tech, they're relatively low tech fraud. Right, maybe they'll buy a machine with 100 or 200, cell phone, right, and in a single location, right, and actually apply, right. Now, a lot of these things you can actually figure out, right. So all these data points that we say, 40,000 or 4,000 data points. A lot of it is actually used to identify fraud. Are they applying at the same time? Are they in the same subnet? Are the IMEAs are actually used to wash app rankings that actually continually use and cycled in down to financial services? You have actually a great bit of visibility in this. And here there's a lot of artificial intelligence involved. You can actually build graphical relational databases, and machine is very, very good at identifying unique occurrences of group models, right, that happens on your engine, and that start to try to trick you. Now, once you get past anti-fraud, then there's the real part of actually giving credit. Now, the part of giving credit is not only, I would say, our assumption is that in the part of giving credit, most people passing the anti-fraud stage are good people, right? They have the intention to pay back if you have the right collection mechanisms, if you have the right scoring mechanisms, and so forth. Now, do they have the ability to pay back? You don't really know until you have more data. Here, what we do is we take that approach and we start with less data, and we actually progressively ask more. Every time we ask for input, we ask for feedback, that actually runs into a data model. So you can imagine there's a slew of data models. It's no longer a single data model based on, I would say, linear regressions that you update every month or something, right? It is actually models that you potentially update daily, right, or machine updated. And here, right, based on, okay, do I think this person is in my 80% good category when I ask 10 data sources? If that's yes, then from a cost-saving perspective, maybe I will give them a loan. And then if it's no, then when do I ask for the 11th data point, right? How does that come from, right? And what are the types of feedbacks you get, right? So we capture everything, including, hey, where are you living, right? And if somebody disables GPS, right? That's actually one data source, right? Somebody enables it, it's a data source. Somebody says, actually, I'm located here, but I'm applying from the city, right? Or somebody that says, I'm really making 10,000 RMB, but wait a minute, I'm going to change based on the money that you gave me. I'm going to roll back, and I'm going to say I'm making 20,000 RMB so that I could get a bigger loan. So every single user action is a data point, and all of these data points play into the models. So simultaneously, then you need an advanced risk engine that it has the ability to run parallel, all right, and consistently thousands of data models at the same time, maybe for a single product in order to segment your customers. And then 3 dimensions or 4 dimensions, if you were to actually look at the data model, it's no longer a regression model, right, or you're trying to draw a linear curve. It's actually a weird shaped blob, right? And this weird shaped blob in China is interesting because it lands in different cities too. The blob in Beijing is actually very different from the blob in Shanghai. And a lot of times, right, at the end of the day, right, the machine actually is able to illustrate that blob, and then it's up to the human, to the computer scientist, to the data science to understand it.
So sorry to interrupt, conscious of time, but I mean, I think the credit scoring bit is certainly one key aspect of it. But maybe Adrian, to kind of close out, from where is the money coming from? Because credit scoring is one thing, building these models, but where is the actual capital coming from? From where do you see it in ASEAN, Hong Kong, and elsewhere?
Yeah, so I think balance sheet is, for any financial services company, financial services hasn't changed for 2,000 years. And I think getting the balance sheet is a critical aspect. So certainly, I think in China is a little bit different for Dianrong, having a P2P ability to access a market for various reasons. We don't see that in P2P players, but we see that as a challenge. So pure P2P players in whether it's Indonesia, Philippines, Thailand, and so forth, we think getting scalability and just being a pure matching platform will be difficult. And we've seen that in the US, right, where institutional money comes in to fund the balance sheet effectively. So I think the term P2P perhaps is not,
It's
correct.
now marketplace lending, right? I mean,
Yeah.
it pretty quickly transformed.
Yeah, so I think that's the issue. But I mean, I think for online lending, definitely this data that we're using at CredoLab, the anti-fraud, the automated checks, at the end of the day, it has to come down to some form of Gini coefficient, some form of measure that the risk people are happy with. In the case of CredoLab, when they used it in a bank, the Gini coefficient improved from 0.53 to 0.61, 20%. And definitely the more data you get, right from the first month, you get first payment default, right? That's not the only measure, but that's a big measure that sort of tells you where your portfolio is going. And to answer your question about the cycle, I mean, I think essentially what we see in the cycle is, depending on what your cutoff is, you'd see the losses typically magnify at each sort of basket of risk. So we've seen the models go through cycles, and it's really the scale and size of the losses. So, what Ling just described is essentially the new world of data analytics. And we don't see financial incumbents doing this yet. They're still stuck on manual underwriting processes. The challenge for what you just described in Philippines, Indonesia, etc., is there is no anti-fraud database you can automatically check into. There is no, blacklist and all of these things. So which is why we've gone for the mobile phone, where you can recreate a lot of things. I apply from Surabaya, but my GPS tells me I'm always in Jakarta. I have roaming. I don't have roaming. I have incoming call to outgoing call ratios. There's about, as you correctly said, there's about 30 to 50 predictive factors out of the thousands of characteristics that will actually determine your behavior. And how you behave is a proxy for your lifestyle, which therefore is a proxy for what you can borrow. So we find that the mobile actually being a very good source, because if you could check to automated databases out in the third party market, then you would. And as they come on board, you would. But when we see Gini improving by 20%, then we think that is enough. Now, there's a whole bunch of other data that you need for collections. Who do you call? When do you call? Do you send SMS? Half of the time, people don't know when to pay, how to pay. So there's a lot of basic things that we see financial institutions could improve that now online lenders are just doing as part of the process to get the money back. Right from the credit scoring, who you lend to, right down to the welcome call, the SMS, the notice, and the payment, right? And that actually even starts right from the start, which is your customer acquisition for your digital marketing. You tweak that whole model right from the end of who paid you back to go forward, right? And start again. So it's all data-driven. You don't really need people, which is actually, scalable and a good thing, so to speak.
Okay, so I mean, actually, unfortunately, we're out of time, because I think we've got 3, really successful, credible fintech lending practitioners on stage. So I'm not sure they'll be happy for me to say this, but please do tackle them in the hallways and ask additional questions, because I think we're really scratching the surface of lending here. The opportunity in Asia Pacific, in China, is immense, and I think the question is, where do the new digital players, where do they sit relative to incumbents? When incumbents, I mean, it's the kind of old phrase that, will incumbents get innovation before innovators get distribution? I think in this case, you guys already have distribution, and it's a question of how do you build on that to such a point that you become either just too competitive a threat to the banks whereby they partner, or perhaps supersede them when it comes to some aspects of online lending. So super interesting. Thank you for our representatives from Beijing, Shanghai, Singapore, and of course Hong Kong. So I feel like we've got good representation. And please join me in thanking our excellent panelists.
Thank you guys very much.